Hey, what's up, everybody? We are live for episode 16. So I was originally going to shoot this one by the pool, but you know what? My internet wasn't working. So I'm human and I'm back upstairs. With that said, there are some new people today because there are people I don't recognize. So I thank you for joining us. And you're saying, who is this dude? Why am I listening to this dude? Well, first off, I am Matt. And what do I see? I see volume. I see demand. I track it. I explain it to you guys. I have a platform, 349 Trading, but this is not a commercial. We have a daily wrap-up show where I share what I saw in the market today, what I saw, I share it with you, I share some slides, and then I answer questions. If you're in a crappy position, whether it's stock or options, please share your position, share your grief. I'm here to try and help you. So it's like a new segment called, what if I had that position? What would I do? So what would Matt do? So let's just get right into it. What we saw today, well, first off, why I'm here again. I'm here to educate you to make you a better trader. So it doesn't matter whether you have like 2 months experience or 2 years experience. If you're very experienced, trust me, there are things that I see in the market that you don't see. And I'm going to show you how my out of the box thinking, enlightens you to share, some things that might help you trade better in the market. If you're a new trader, you're like taking an AP class right here. I'm giving you advanced lessons right here. So you're coming in as if you're like in 12th grade or your 11th grade, special, whatever it is. Doesn't matter that you have 2 weeks. You're going to learn stuff that traders on Wall Street don't even know. Why? Because it's different generation. I graduated college in the 90s. I went to Wall Street in 96. I worked there for 5 years doing different jobs, working for hedge funds, working for institutions. I just see stuff. They recognize my talent. I used to go every 6 months. I'd go to a new hedge fund. Again, I'm not I'm not a financial advisor. So what I give you is what I'm seeing in the market, and I share that with you. And I share my trackers and what we see. And I hope to make you a better trader. I hope to share the direction of the market with you. So let's get right into the direction of the market. I wrote all these things down, but I'm just going to wing it from here. So Thursday, what did we see? We saw the NASDAQ right before the close. It spiked up. It actually finished positive. Friday, there was a continuation. Monday, we sold off. Right. And then Tuesday, what was I telling you since Thursday that I was speaking to my buddies in New York? When I refer to my buddies in New York, I'm referring to the people in finance, the people at hedge funds, the people that are like CFOs of these big companies that I'm still in touch with because we're friendly. I don't pick their minds. I don't share what I'm doing with them. I don't share that I'm trying to educate you. What I do is I say, hey, are you guys looking at tech? Because I'm looking at tech and it's looking pretty tasty right now. And they said to me last week, which I shared on Thursday in the live episode, what was it? I think it was 14. I shared that they were waiting till earnings was over last week. Now, earnings aren't completely over, but all the big guys, they showed their earnings last week. So everything's already situated into the market. So it did not surprise me. And I did a couple of pre-market videos, 2 of them this morning to tell you guys, please be cautious because your positions, even though they look like they're getting wrecked pre-market, will probably be better off later in the week than they were today. So don't scare sell. And I'm going to talk about a couple of specific stocks when we get to it. Let's talk about the Dow. On Friday, right, it peaked. So over the weekend, I shot a video to all of Twitter and I said, listen, the Dow peaked on Friday. It looked really good at the end of the day. I'm going to sell first thing on Monday. Now, I happened to get lucky. Did I know the Dow was going to sell off 600 points this morning? Not at all. Did I know the Dow was going to turn red yesterday for 35 points? Not at all. The Dow was up 250 points yesterday before everything collapsed. With that said, I got lucky. It's all about being smart, but also being good with the timing. You have to put yourself in the right opportunities, okay? Same is true for life. If you're going for a new job, you have to be smart, but your timing has to be good, and you have to put yourself in the right opportunity to be successful at whatever that is. So again, please, if you like this video, if anything I'm saying resonates with you, if it helps you out of a position later on, we talk about Q&A, share the video. Everything myself and my partner do is organic. The platform we built is organic. The app we built is organic. Good news on the app, we're actually retailoring it. So we're hoping within a few months, we're going to have a new app, a new website, something that we are tailoring specifically to meet your needs and to improve the community because we're all about community and all about family. All right, so I spoke about the Dow real quick. What happened? So the Dow sunk. I mentioned tech was stronger than the Dow. It made me think tech was going to be actually strong on Monday. It wasn't. They sold off on both. All right. But I had, a reaffirmation this morning that tech was going to be okay. And it ended up being okay. I'm surprised the UVXY didn't sink lower. I expect it to sink lower this week. So anybody that's following me, the UVXY, which is the volatility index, it's like the VIX on steroids. It's currently at like 490, let's say. I expect it to be under 450, and I expect it to be under 450 within a few days. Again, I'm not a financial advisor. I'm just speaking my mind. And whatever you get from this video, whether it's a lesson or a tip on an ETF or a stock or something like that, hopefully it helps you become better at trading. Hopefully you follow the patterns and understand what I'm sharing with you. And yes, I speak very quickly because I have a lot to say. Plus, I know you guys always have a lot of questions at the end, and we never get to all the questions. And it would upset me if you didn't get to the questions. I'm just mentioning Jim Cramer real quick. If any of you ever watch his show, I only like the end part when he talked about the lightning round. Fast as could be. Did he like a stock? Did he not like a stock? Now he's full of shit. So it doesn't really matter. That's why I'm doing what I'm doing, but we're changing it. I want to help guide you and get you out of positions and help you, be more profitable and be profitable quicker and not hold the bags. If there are positions to get out of, I teach a lesson. It's on my platform. It's about stepping in shit. Once you step in shit like you did on the sidewalk, are you going to stand in shit and just stay there and watch your stock as it gets beaten up day after day, or it's not profitable like you thought it would be? No, you exit out of that position. If you ask specific questions about stocks later on, I'll tell you, hey, that's that lesson. You want to step out of it, reevaluate, and position yourself better going forward tomorrow. So with that said, I made a bunch of videos today and broadcasts today. Why was I so active today? Because I didn't want you guys getting scared, okay? You saw the NASDAQ pop. You saw the Dow pop a little, and then it sold off at like 11 a.m. I made a video. I said, don't worry, we saw where it's heading. Then I did the same thing at 2 p.m. I made another video, and I said, don't get worried about the sell-off. It's a lunchtime dip. Everything's going to spike a little, meaning the SQQQ and the UVXY, because the market is going to go down a little. Then they tried it again at 3 p.m., and we saw it recover. So what am I expecting for tomorrow? I'm expecting green for tech stocks. I'm expecting green for the NASDAQ. Doesn't mean every stock, but there was strong demand in a few stocks. And I'm going to talk about stocks real quick. I think I'm up to that point. Okay, so real quick, I gave a lesson this morning on Twitter where I mentioned Tesla. It was 10:45 in the morning. Tesla was $604, and I said it is my tracker. If I'm correct, by 11:11, it will go up to $606 or $607. If I'm incorrect, it will go down. So what happens after I sent the tweet? Tesla goes down to $602. And then what happens right after 11:11 a.m.? It pops to $614. So we knew the direction of the market. We knew that there was some recovery. It went as high as 624, a little too high for my standards, my taste. I would have sold, I would have bought puts. But again, I'm too busy sometimes trying to teach and educate and share what I'm seeing in the market, because that means more to me than making a few dollars. Again, and I don't charge a lot for my platform. It's $3.49 a week. But if we somehow go viral and I reach 100,000 or 1 million people, that is the goal, to disrupt the financial markets. Not by trading like Reddit and giving you guys stocks and saying, everybody go buy this stock at once. That's not the correct way. To teach you how to trade better, to teach you about entry point, to teach you to plan ahead when it comes to entry points so you prepare for the dip, to teach you to plan ahead when it comes to selling your options or your stock. So when it spikes, an example real quick, Party City. Everybody knows I've been giving Party City out for 5 weeks. Since I thought it bottomed at like 550, I doubled my position. I brought my average down to like $6.07. I said my price target is $10. When it hits my price target, I am selling. I don't care if it goes higher. I mean, I do care, because I would look at the glass and be like, oh, I could have held it to 11. The point is, I'm out of it. So right now, after hours, I saw it was trading at 982 or something like that. It doesn't matter to me. I'm out at $10. I averaged down at 550. If you got in at 550, I tweeted like multiple days in a row, I can't believe Party City is there. And then every day after that, I tweeted, what a beast, Party City. Look at this beast, Party City. The market's getting beat up, but Party City is not. Then what happened today? It spiked. We got to $10. We got our exit point, made $4.50 on that. So the computation is what, like 84%? 84% in 5 weeks. It's golden. Not every stock reacts like that, but I have a lot of stocks. I look for value plays. I look for stocks that have the most upside and the least downside. So when I give you a play, just for anybody that says, I see your alerts, I see your transparency, I don't know which trade is which, I share both. When I give alerts, it's that I'm more comfortable with those. I think those are more secure. So they might not return 400 or 500% on the options, but they are a safer play. When I say that I invested in something, I'm just being transparent. A lot of people follow all of my plays. A lot of people follow some of my plays. But this morning, I mentioned pre-market, DDD. It was up like 6%. And I said, if I'm correct, that stock will go above $20. Guess where it went? It went north of $24. That's DDD. Again, so I gave the alert. It's not an alert, but yes, I'm telling you, I bought pre-market. So if I'm buying pre-market and I share through transparency, it kind of is an alert. It's not an official alert, because only official alerts go on my spreadsheet. But if I'm telling you, like, hey, At open, SQQQ, I averaged down my position from yesterday, and I bought extra options at 9 cents. I think they went as high as 12 cents, so I'm still down about 50% on the trade. No, not 50%, 33% on the trade. The point is, I can't share every single trade with you. I try and tweet as much as possible. I try and do broadcasts, but it's like the guy that cried wolf, right? If I cry wolf and I do a broadcast, then I do another broadcast, and I do another broadcast. By the time I have real news for you guys at whatever time that is, the fourth broadcast in, you guys are gonna be like, oh, he's probably talking about his live stream. Oh, he's probably talking about this stock again. Oh, he's probably talking about whatever it is, like Roblox, okay? So this morning, I sent out a tweet about Roblox, right? And you guys know I've been talking about Roblox for 3 straight days. I came out yesterday, said they killed earnings, and I don't understand why it took after hours yesterday for me to just gain back what I was down, because I bought in at $65 and change, and it was down and closed yesterday at $64. So I was like, what? I thought they were going to crush earnings. I thought Roblox would be off the chain. People invested in Roblox today. I think I might have a slide or two. If I don't, my Roblox options made 250% today. I made a bunch of money today. So Roblox, 250%. My FCX options that I bought this morning made 40%. CLF, which I've been talking about, which we did not enter yesterday because it was up 8% and then it went down 2%. When it was off today, this morning, I got in cheaper than $20. Again, I touted that my spreadsheet was live at 9:35 a.m. What happened? I pre-market planned. I planned for all these purchases the morning dip. Why? Because I knew how hard the market was going to sell off on open. There were things pre-market that were down 25%, 17%, 18%. That is not common. Stocks do not fall by that amount. So even if they were going to go down, I thought I might get a quick bounce, and I was right, and I secured all my positions except for Carnival Cruise Lines, which I missed. I was at $25. It only went down to $25.09. So I reevaluated. I tweeted later today, later this afternoon, CCL, I bought it at $25 and I think 19 cents or 20 cents. I know it finished up maybe 60 cents from there, so that's probably like 3%. The point is, we look for best entry points. So that was the only bid that didn't get hit. If you look at my spreadsheet, you'll see where I averaged down. I did some great purchases this morning. NEO pre-market, I didn't have enough money for it, but it was $30 and change pre-market. And I think it finished at like 34 and change, maybe even $35 at one point. So again, it's about entry point. If you're in NEO already, you could have averaged down. If you thought the world was falling, that's the best time to buy. I told you guys I'm a contrarian. So we ended the segment yesterday with, hey, the market's falling, everybody's dying, the sky is falling, whatever it is. And I said, you know what? The good news is I'm a contrarian. When things look the worst, they're usually not. The hedge funds, the institutions, they trick you guys into selling. So real quick, plug options. It's $27 calls that are due, I think not even this Friday, maybe, it is this Friday. This Friday, $27 calls, right? This morning, somebody sold their options for $1 per contract. Then they were as high later in the day as 22 cents or $22. You could have had a 2,100% return. So sometimes when I tell you to plan ahead, if you think someone's going to scare sell, you can waste, it could have cost $5 for 5 contracts, not 500, $5. They were selling for a penny each or $1 per contract. Who the heck is selling that when you have a full week? I get the market looked like it was going to throw up today, but still, you always have hope. You always assume it's oversold. There is extreme value. So I averaged down a bunch this morning. I'm hoping it pays off. What are we? Tuesday. So I'm hoping it pays off Wednesday, Thursday, Friday. I am going to get to your stock questions. I've got a couple other positions I'm going to share that I entered. So CCL I mentioned. I entered at 25.20. I messed up. NNOX, NNOX. I entered at $21 this morning at like 9:30 or whenever the market opened. I put in a bid to take my average down. I didn't know where the stock was going to open, where it was going to go to, but I said, if I can buy it for $21, I'm happy. Later in the day, it was $23. Then I think it finished at $21 and like 78 cents or 80 cents. So I didn't crush it, but still 4% is 4%. And if I can average down and pick up 4%, I'm happy. SWI, Solar Winds, that's this company in Texas that got breached, and then they went and hacked the government from there. Again, it's been so beaten up. All the shorts are gone. I saw the volume pick up the other day. I entered into a position after the market opened this morning. I don't think I grabbed the low. I grabbed $16.21, but I know it was up from there, maybe $16.41. So again, didn't crush it, but 1.5% is pretty good on any given day, and my stock hasn't reacted yet. So that's SWI. What else did I buy? So D-Dog, I purchased this morning at $73.40. Why? Because we saw demand after they came out with earnings. There was demand. So I knew if the NASDAQ was beat up today, people would be selling their DDOG, their D-Dog. And I know people already liked it because they had earnings and it went up 10% after hours the other day, or 8%. So I know there's demand. So again, same thing with DDD. This morning, pre-market, it was up like 11%. When the market sold off, it went to 5% up. That's when I purchased it. It doesn't take a genius to realize that if the market turns around and the sentiment is okay with me and the market doesn't capitulate, it isn't down $1,000, the Dow, 1,000 points in the Dow, that DDD was going to rebound. Did I know it would rebound another 20% on top of my alert? No. When I purchased it, it was $18.81. Then I alerted it at $19.14. It was as high as $19.71 pre-market. Then it split 20, and then it got to $24. So again, if you take a shot and you're like, dude, this guy has stock, he's pretty on fire lately, let me take a shot, let me buy one option. So people are saying, I don't have enough money to average down. Get out of those shit positions you're in. It's better to have money on the side. I've told you guys before, I have 74% of my money on the side. I made a bunch of investments today. I'm down to 59%. So I put in an extra 15% today in the market. I didn't buy Dow stocks. I didn't buy Delta. I didn't buy airlines. I didn't buy cruise ships. What did I buy for my personal thing? I bought all the tech stocks that I'm talking about. Anything that I averaged down on my spreadsheet, I bought for myself too. I put in the orders in advance. Okay, MT, I gave this alert pre-market. So I got in at $32.33. It wasn't an alert, but I was talking about MT, MOS, CLF, Cleveland Cliff, and FCX. So they all run in the same area. Same with NUE, right? They're all materials play. So again, I purchased, you'll see on my spreadsheet, it was the first position. It was there at 9:35 this morning. So, and there were dips for all these stocks. Anybody that follows my spreadsheet, you'll see when I pick a stock, there's always a dip later. It might not be the 10-minute rule, which is 10 minutes after I give a stock, it goes down. Okay. Then I saw at the end of the day, people were talking about Chris Sane and these put options for Snap or whatever. I didn't even know what it is. I know who Chris Sane is because I can't believe he has so many followers. My point is, he said put options. The stock looked like this. He said something else. My strategies, what I'm teaching to you guys is risk assessment. I'm making you guys better traders in red markets, in bloody markets like we've been seeing for 10 out of 12 days. And I think today was even down at the end. I don't know, maybe up a little or down a little. But today was a rough day. So everybody, risk aversion. You're learning how the market trades. You don't get fooled when the market's selling and you sell into it. And it's a snowball effect. Because let me tell you what that lesson is. That's the compound effect. When you make a bad trade and you're down 20 or 30 or 40%, and then you sell before it spikes back up, you don't give yourself time because you're like, oh, I see something better over here. So you sell minus 40%, then you see something better, and you buy and you're chasing as it's on the way up. And then guess what happens? The first stock goes up, the second stock goes down. It's called compounding your mistakes. So now you're down 40%, you just dropped another 60%. Now your account's looking like crap, and you do the same thing 2 more times. Then you restrict your account from day trading, and you've lost 80% in one day instead of just sitting tight, zooming out. Okay, I teach you a lesson. Zoom out on stuff, man. Stop following minute charts. Stop following the 5-minute charts. Zoom out. So basically, the compound lesson is you just lost 80% in one day instead of just sitting there and maybe being down like 18% or something else, because you're trying to save yourself. You're trying to save the position. You're thinking you're smarter. You're not quicker than computers. I'm not even quicker than computers. Everything I see, I try and share. But there are times when I give an option and someone missed the strike or they missed the expiration date and they ask me, hey, what was this? I said, dude, I gave the alert like 20 minutes ago. You can't jump into it now. You're already off 15 or 20%. So the point is, you can't just follow someone in blindly, okay? Open your eyes, look at my price entry, look at your price entry, try and match them up, try and get a better price entry than me. So people love to tout, I beat Matt by 5% or 15% or 20% on options. You can do it. My alerts aren't golden. I don't have a crystal ball. If my alerts were so golden that I said jump and then the market jumped or something like that, or I picked a stock and then all of a sudden it shot up, I wouldn't educate you guys. I'd be living in a mansion with a 300-foot yacht, something like that. That's not what I'm about. I'm about showing you guys how to do things the right way. When I don't talk about Reddit or GameStop or AMC or to the moon or something like that, it's because that's more like playing roulette or playing craps in a casino. I'm teaching you guys how to fish rather than fishing for you. I'm showing you guys what stocks I like, where my entry point is, what I think about the stock, where my price target is. Okay, so let me see if I have any other stocks. Oh, so yeah, Plug this morning again and DDD. So Plug this morning, it was getting pretty beat up. It wasn't like excelling, let's say that, okay? And then I gave the alert. It's on one of the slides. I think Plug was still under like $22. And what happened? It went up $2 more. So nothing's perfect. But if I alert something that I see heavy volume and that it could pop one day or something like that, could explode in the afternoon, it's because the demand is there. I see it. If somebody decides to take an extra position for 1 million shares or 2 million shares, like an institution, because that's what I'm talking about, that's what makes the stock move, then it's going to pop, and it's going to pop $1, it's going to pop $2, and I'll show you in the slides. You know what? Let's go to the slides real quick. I'll see if I can cover those slides, and then we'll get to the questions pretty quick today because we're inside 20 minutes, which is great. I'm so glad everybody's sticking around. So here it was at 12:38 p.m. I mentioned plug on a Twitter. It was still $21.86, and I think it's above $24. I don't really know. The point was volume was insane. So all it takes is a little more volume. And what do you see? A 10% move from already a positive day. Let's go to the next slide, please. Okay, NASDAQ, again, 12 p.m. I told you guys, volume was sick. I mean, people were buying in, institutions, hedge funds. So again, I thought the NASDAQ would finish strong, which it did. Again, you have to look at volume. You have to look at demand. That'll tell you the direction of the market. Next slide, please. Okay, again, so I didn't make an alert this morning. Again, I mentioned this before, but if I buy something pre-market, I'm telling you guys, I'm using it as a tracker, and I think it's oversold. If I tell you that a stock is oversold and I'm going into a position, it means I obviously think it's going higher. So anybody that's like, I didn't get the alert on DDD, you know what? You did, because this morning at that was a pre-market alerts, but at 10 a.m. I gave out another alert, and then DDD exploded 20% from there. So again, if you think you missed the alerts, you don't. You just have to look and focus. If I'm sending out a tweet, every alert, every stock position I add or an option position I add has meaning. So if someone says to me, hey, what do you think about Roblox at the end of the day? Did you sell my options? No. If I alert you to selling Roblox, I will sell Roblox. I'm up 250%, if not more, at the end of the day. I know it popped. I said it popped at like 74, then it popped to 75. I can't keep telling you it popped to 76, 77. Let's go to the next slide, please. Let's see if we're almost done. So I want to get to the questions. Plantier. Okay, so pre-market again this morning. Plantier crushed earnings, yet pre-market it was down 10%. So it didn't make sense to me. There were so many companies beating earnings. So I thought to myself, you know what? These companies are going to do well. I just sent out a tweet showing you guys. So if I am right, you can make profit, because it's all about percentage gain. It's all about picking the entry point, exit point. Next slide. I think we're almost done with slides. Oh, excuse me. I don't know if you guys can see the language. Anyway, I made a mistake. So I'll tell that real quick. It's a good story. I made a mistake this morning. UVXY, I was buying $5 puts. Instead, I bought $5 calls. I didn't even realize the price difference. I paid like 17 cents. And then I was like, oh, it's going up. I paid more at 20 cents. And then all of a sudden it's 26 cents. And I look and I have the calls and I'm like, oh my God, I have the calls. That's not what I wanted. I want the opposite position. So we all make mistakes, okay? And sometimes they're profitable. Other people have said, yo, I followed your alert, but I made the mistake. Look, I'm up 12% or 14%. It's great. As soon as you notice the mistake, if you want to reverse it, you can. So what did I do? I sold my calls. I had 45 contracts. I made on average, let's say about 40%. So I made 40%. It was crazy. It's not a killing, right? Because I didn't take a huge position. I had 45 contracts. They weren't very expensive. So I spent under $1,000. With that said, I still secured my percentage. I moved on. I bought the puts, which is what I wanted to do. They were profitable by like 20%, and then they were down 10%. So I wasn't swinging them for the trade. I am holding them overnight. So again, UVXY, I expect to go down. SDOW, which is an alert I made late in the day, I expect to go down. SQQQ, I expect to go down. So yes, I'm expecting a green market tomorrow. Why? Because the market's been so beat up, and they showed you today that there was interest. All right, next slide, please. Sorry, crazy ad. All right, Tesla. Again, this is my lesson this morning. I wasn't telling you guys to buy the Tesla stock. I was saying, as a market tracker, watch Tesla stock. If it hits this level, you know you should be more bullish. Again, the Dow was down 600 and tech was off like 200 points. So you really had to know market direction. And this pointed out to you. Let's go to the next slide, please. Best lesson all. Everybody, please look at the slide. Take a screenshot of it. Blow it up. The point was, I think it was May 6th. I was in plug. Okay, so I was in plug. May 7th, I saw the market was going down, or I thought plug was going down. So I sold my position. When I tell you guys I like a stock, it was a small one. It was just a small stock trade. But the point was, if I see it going down, I tell you, save your position, sell your stock, sell your options, take your profit. Okay, in this case, I took a minor loss. I got out of the stock, and then I got back in today, and my entry point was $18.75. And now the stock is what? $24. So again, it's about entry point. It's about return. I went from a losing position to 22% positive on this one. So I think that's it. Let's go to the next slide. If not, we're done and we can go on to questions. Next slide, or we're done. All right, we're done. Awesome. Yeah, so let's start with some questions. Let's see what we got. So again, this segment can be whether Matt would actually hold your stock if you're just asking me to review a stock, or whether I would sell it. So if you give me 100 shares, I'm either holding or selling. If you have a specific question about getting you out of whatever position it's in, say you stepped in shit and you want out of your shit, do you sell your stock? Do you sell your options? What are you going to do? So this is also called What Would Matt Do? So I asked you guys to please Bring me forth questions that you're just confused. Hey, I'm in this position. I have 100 shares of whatever it is. What would I do right now? And I'll tell you. Okay, so SQQQ, 11 and a half, made 14 contracts. You have 7 contracts at 19 cents. I could already tell you what would I have done this morning, exactly what I did do this morning. I bought additional contracts at 9 cents. Now, you can't do that right now. But what I would tell you is let's see where it closed because I want to give you specific, Julian. SQQQ, here we go. After hours is up to 12.21. So it's moving the wrong way. We need it to move at least 70 cents. And we have Wednesday, Thursday, Friday. The good news is the market reacts quickly. So these ETFs, the SQQQ, the SDOW, and especially the UVXY, it will move quickly. So you'll see it go down like 30 cents or up 30 cents, or you'll spike or see it dip this tomorrow morning, right? So it's up 0.74% after hours. If I'm correct, and if tech is up in the futures, you will see this tomorrow morning, probably under $12, maybe $11.99, $11.98, something like that. But we need it to go down further. So let me look at this option price right now and tell you. So the $11.50 puts, and they expire in 3 days, and they're currently 74 cents. Okay, what? 11 and a half. Maybe I have SQQQ. Oh, I have the calls. Sorry, that's what my problem is. No, I put puts. Right. Okay, here we go. Yeah, I don't know what happened there. Okay, so they're currently 10 cents and 11 cents. So you're basically 50% down. So the question you ask yourself is tech going to recover? What did you see today? Now, we saw tech try to break through like 2 or 3 times today, and it didn't happen. Again, that was because tech was down 200, 300 points, something to that extent. It's hard to go from one extreme or end of the pendulum to the other. That's what my lesson was the other day. I said, tech's going to turn around, but it's not going to just swing where it's a V and goes from being shitty to being the best thing possible. There's always some type of rotation. There's always timing so that we don't miss it. So yes, I think tech's going to turn around. I think tech will be stronger later in the week. So whether it's Wednesday, Thursday, or Friday, I think tech will be stronger than it is right now. So I think I like your position. It's at 19 cents. I would have averaged down because you're down. It's down to 10 cents or 11 cents. That means you're down 8 or 9 cents. That means you're down 45%. I would have bought a second contract. You have 7. I would have bought 14 more. Why? Because that's the way I average on. So if I buy 14 contracts at 10 cents each, right, that's $140. You're in for $140. So that's the same amount, right? So now you have 21 contracts. It's 10 cents each. So your break-even point then becomes what? Like something like 13 and a half cents. So as soon as it spikes to 14 cents, you're good. All right? Point is, it's got to go up 40% rather than going up 90%. All right? From 10 to 19 is 90%. So you're looking for a move. So again, if you think tech is going to rebound, what would I do? I would buy 14 contracts tomorrow at 10 cents each, which is the current bid. So I put in $140 more to average down the correct way. Doubling your position, but you're buying 14 contracts. Okay, yeah, next question is good. Don't know if you talked about it. There's joined. I was current inflow, outflow. Why would a stock? Okay, real quick. Inflow versus outflow. So inflow, when there's more inflow, usually it pushes a stock higher. Now, an outflow usually pushes a stock down. But let's just go to how can there be more outflow when a stock is going up? Easy, all right? So a company announces some good news, the stock goes up, but there are so many bag holders that there are people selling for the bid. So although the stock is higher on the day, the outflow is stronger. More people are selling, okay? Because you have so many bag holders. So good news, more outflow than inflow. You'll see stocks go up 20%, and yet the outflow is so huge. And you're thinking, wow, volume's huge, outflow is big. Yes, because people are buying, but the major positions are leaving the stock. The same is true for the reverse, okay? So there's more inflow, yet what are we saying? The stock is going, no, there's more. We did more outflow. The stock was going down. It doesn't make, the stock's going up doesn't make sense. There's more outflow, the stock's going up. So there's more inflow and the stock is going down. I guess that's what it is. Yeah. So there's more inflow. All it means is that people are getting their bid met lower and lower. Okay. Usually there could be a short involved also. If there's more inflow and volume is stronger, you're like, there's this much inflow. Its stock should be going up. There are huge positions taken in my stock. Why is my stock going down? It's just people are preparing. They're paying a lower price. These institutions, when they enter into a stock, let's just say they pick Apple, for instance, okay? And they're like, I want to get the best entry point for Apple. They don't go out today and buy Apple. They're looking for Apple to dip 4%, and they enter the same way that we do at 25%. So if they have, $40 million to spend, they do $10 million when it dips the most. And then if it dips more, they spend another $10 million. They act as a supportive role. They don't chase. So when you guys see big buys that are chasing, those are more retail traders that are chasing it. That's why I teach you guys don't chase. Okay, so let's go to the next question that was kind of answered. ACY, notice a sale following bankruptcy. If you got these documents from Webull, yeah, I did. You know what? I mean, stocks go through this. Let's just remove the question because I like when I see myself better if we could do that. Okay, well, I want to get to that question anyway. So yeah, Webull, I don't believe any news on Webull. Yes, they filed documents to go bankrupt. However, if you look at the stock price and the institutional price, that's why people are selling. It's such light volume for ACY. I think it's a true $10 stock. I'm not averaging down on it because, let's get to the actual stock. Now that I have this time, let's see, ACY. And we're doing great on time today. I appreciate that. I like to get to it quick so that actually people can actually watch this and learn and get lessons from everybody. Okay, so ACY is down to $7.48. Yeah, I mean, I think that's easily a double-digit stock. They have such light volume. It's 560,000. The average volume is over 4 million. So it's been like this for weeks on end. And what happens in a bloody market? People sell every day. Why? Because they don't want to hold on to the position. Is it moving? What's with it? I see bankruptcy. Webull is bullshit. Some of these news releases that they do, they release law firms' information all the time. It's such crap. I wouldn't believe anything you read in Webull. I would go to Bloomberg or Reuters or Fintel or even Google or Yahoo for my news. Okay, next question, please. Sorry, crazy. What do I think about June 18th TRIT options? Will they rebound? 19 contracts down 52%. What I would tell you is TRIT is beat up. TRIT, it is beat up. I don't think they came out with the earnings yet that I was expecting in April, then I was expecting in May. I know I extended my TRIT options. I never bought any more. So I'm in for 8 options at like $74 each, which is what, about $600. Yeah, they suck. I mean, you have more contracts than me, and I'm sorry, it's just been beat up. Blockchain's beat up. Bitcoin stocks are beat up. TRIT was beat up. That's just simple as it. Very low volume in TRIT. It used to have 3 million a day. Then it was down to 1 million a day. And again, that's extremely light volume. Then on days, again, same as last, like when you have selling for 10 out of 12 days, that stock's just going to get beaten up hard. I spoke about Candy yesterday, KNDI, right? I think it was at $4.40. And I said, I can't understand it. I'm not investing in Candy, but I don't understand how it is. I think it got closer to 480 today, so maybe it went up 10%. I don't know. I don't want to look at it because no one asked that question, but let's move on to the next question. So what would I do? I would look for some type of spike. You have till June 18th. So I'm looking for a spike, any type of spike where it goes up 10% in one day. I would sell my options, prepare in advance. So figure out what your options would be worth. Let's just say they're worth 50 cents now, and you're expecting a 10% spike. You want to look at the delta of your option, and then you multiply it by the price movement to understand where your option is going to go. So if you say the stock is going to go up 10%, which is 50 cents, you take the 50 cent price movement in the stock times the delta for your option, which let's just say it's 0.4. Okay, so 50 cent move times 0.4, multiplying 20 cent price movement in your option. So wherever your option is right now where it closed, add 20 cents to it. That's where I would set my sell target. So if there's a spike, I automatically sell it. Now what do? I'm going to buy the September call options out a few months. I'm going to look for a dip. So say you sell on a spike and then you wait a day, 2 days, or 3 days. There will be a dip in the stock. I did it already with TRIT. I had April options. I extended them to May. I had May options. I extended them to June. And now TRIT was so beat up the other day, I didn't think to extend them. I didn't even look at it today. If it bounces, if my alert goes off and it's up 10%, yeah, I will be doing the same thing. I will sell my 8 contracts for June for the highest price. I'll put on the order ahead of time before it spikes wherever I think it's going to spike to. And then when it goes down, whether it's the next day, the next 3 days, or the next week, whatever it is, that's when I will buy the contracts for September or July or whatever month I'm looking at. Let's go to the next question, please. Good questions, everybody. So funny you're mentioning this. My thoughts on plug options that are expiring the end of this week. Will it be green? You said to remind you. Okay, yeah. So I kind of spoke about this earlier, and the reason I didn't answer the question yesterday, and I asked you to please remind me about those, because I didn't know where plug would finish. Okay, so I made a comment this morning about plug when it was 21.73, and I said there's huge demand. And then what happened? I think it passed. Let's just look it up since we have the time here. Plug. Okay, plug power 23.60 up after hours to $24. So, and it went up $3.53. So I always tell myself the stock can go up exactly what it went up already. So if it's at $24 after hour and it goes up $3.53 tomorrow. And I'm not saying it's going up there tomorrow, but again, you have to make predictions. Anybody that follows me knows I like making predictions. It doesn't matter if it's about the stock market, whatever it is, interest rates. I make predictions about everything because it helps you figure out if you're right. The more predictions you make about whatever it is, a stock or the way the market's going or how the market's going to react to news, it makes you smarter. If you're wrong about your predictions, it makes you smarter because you figure out what you're doing incorrectly, okay? So your plug options. I mentioned the $27 calls that expire the 14th. So you're asking about different options expire. Yeah, you have another week. I think those are great, bro. I think you probably were in the shitter this morning. If you average down the right way, say you were down 40 or 50%, and you were probably down 70% when the market opened. Hopefully you bought 2 more contracts. If you had 1, you bought 2 more, so now you have 3. If you had 4, you bought 8 more. It's the proper way to average down. But yeah, what do I think? I think plug looks good. I saw the demand today. I mentioned a couple of times it could pop. I have stock that I actually bought pre-market that I thought it might pop. That's up 25%. So yeah, I expect plug. It could rip off another another 20%. I guess it could. I'm not saying it will, but you have to have both sides at play. So you have options. You're going to plan in advance. I'm going to look for some type of 10% gain tomorrow, and I'm going to look to see how it would react with my options. I'll multiply the change in the stock price, which would be 10%, which would be $2.40. All right, so $26.40. I think the stock will be at some point tomorrow if I'm right. And then I'm going to see what I can get for my $27 calls and my $28 calls. And if it's worth it to me, I will put in an ask price and sell them. If not, and I think I might get more on Thursday or Friday, and I think the stock could pop even higher. I'm not saying it will. If I think it will, I'm going to hold on. So everybody makes their own decision on options. But I'm telling you what I would do. If you average down this morning, guess what? You probably could have sold and you'd probably be green already. A lot of people average down. Just plug happens to be one of the ones that I think it popped like a lot of percent today. It popped ridiculously today. So yes, if you bought when everybody else was selling at 9:30, at 9:40, at 9:50 this morning, at 10:05 this morning when I spoke about the stock, then yeah, you're probably green or you're looking a lot better. Let's go on to the next question, please. Crazy hot out. UVXY is a stressor with the up and down all day. $5 puts, 521. Yes, you're currently red. I mentioned this earlier in the broadcast. UVXY, first of all, it's very volatile. So here's what I expect. When you wake up tomorrow morning, let's just see where it finished at today. It might even be up after hours. Why? Because they don't understand everything about the UVXY. It goes down when there's market stability. Again, today the markets were off like 600 points and 300 points. That's the worst it's going to get. Wherever it spiked to today, $4.92 or something like that. Let's see where we're at. Yeah, so it spiked to $4.95. That's the worst it's going to get. If it broke $5, it would have been scary. It didn't break $4.95, so it's $4.86 after hours, which just means there's volatility. But there's huge sell signs. So after hours, people say, oh, what's the stock doesn't move? It's not a stock. It's regulated. It's an ETF, an exchange-traded fund, which means if you want to buy it at this price, and that's what the price of the ETF is, you could buy 1 billion shares at whatever price it is, as long as it's trading within the market's day range. So if you're buying shares at 3 p.m. and you're like, I want to buy 1 billion shares, but I'm going to push the market up, it's not going to. It's an exchange-traded fund. There are as many shares as you want. So when people say, eat that wall, if there's a wall up, it's because someone's selling their shares or someone's interested in buying the shares. It's a good indicator. Again, UVXY, when it goes up, that means market's volatile. Usually the markets are going down. So of course it struggled today because the market was down 600 points and the Dow finished off 540 something points. So yeah, but I like the options. Yours expire 521. I wouldn't worry about it. If you want to average down, you certainly can. So the UVXY, just look at the history of the chart. It popped to 15. It went back to 10. It went to 12. It went back to 8. I can't believe it's at $4 and change. I happen to think it's going to 450, and I think it'll happen sometime this week. I was surprised it didn't happen today. I definitely think it will happen tomorrow, unless the markets are all screwed up. If the markets are all screwed up and the markets open up down 130 points and drop 200 points, yes, the UVXY will spike past 5. So if you think the market's going to be crazy tomorrow, then try and get the most out of your contracts that you can. Take a small loss. I was buying more SQQQ, which I mentioned all day, and I was buying more UVXY. Every time it spiked, I bought more put options. Why? Because I think these both are going down. I think the SDOW is going down, which means I'm more bullish on the market. All right, you've heard it many times. But why am I so bullish? Because we've had so many bad days. Ugh, I hate people that are in APRE. Okay, so If you're down 31%, that means it's off $1.80. I can do the math. I don't need to look up the stock. So if the stock is $4.20, okay, you haven't been following me that long because I spoke about this stock and I spoke about selling it at $5.61. Yes, I remember it from my spreadsheet. I sold it at $5.61 and people said, why? I thought you liked the stock. I said the stock could lose at least 10% or more. So what happened 2 days later? It went down to $5. And now where are you telling me it's off 31%? So it must be $4.20. I don't follow the stock. So I'm sorry. If you're in that stock, there is a way out. So say you're down 31%. So you're down $1.80. You're down about what? $740. Tell me, I probably nailed that. You're down $740 on this trade. What can you do? You can sell your shares. They're worth $4.20 each. So you have about $1,700. So $1,700, you're down $500, right? So you buy some options instead. You buy some $5 options that are maybe leap year options to January, or maybe they're September or October or November. Again, I'm getting you out of your shitty stock position. You're down 31%. So guess what? You buy these options that I'm telling you, September, October, November. You buy them in or at the money. So if you could buy $2.50 ones, great. If you could buy the $5 ones, great. If they have $4 ones, great. Get them as close to in the money because you're assuming that the stock's going to move at some point. That's why you're in this stock. You haven't sat in the stock losing 31% because you think it's a pile of crap and you think you're stepping in crap and you like stepping in crap. Nobody likes stepping in crap. So if you actually think the stock's going to go back, and we're not saying you're going to kill it, let's just say it goes back to $6.02 or back to $6. Let's say it goes back to $6, and let's say it happens by September. Buy the September options. Okay, you're down what? What did I say? $740. You want to make back the $740 plus a couple more. So you're going to use your $1,600 sale from selling the stock. You're going to put it into options, but the safer options, the September options, I'd like you to get in at a $4 call if there is one. You wouldn't pay too much because the stock's only in the money 20 cents, and then you have the time. So I don't know, probably sell for like 70 cents if it actually exists, maybe 80 cents. The point is, you buy like 20 option contracts. If you're right about the stock, and let's say it just rebounds to $5, it doesn't even kill it. It goes up 20% from $4.20 to $5. Guess what? Your options are probably going to make you somewhere close north of 40 or 50%. So you'll be up the difference between 50% and down 31%. You'll be up 19% if the stock goes to 5 by sometime soon, whatever it is. As long as it moves once you purchase it. At $4.20, if you think there's limited downside. Now, if you think you're in the stock and it's going to go down to $3.50, then why the heck are you still in the stock? I'm assuming you actually like the stock, and that's why you're in it. So that's what I would do. I would sell my stock. I would look at the options. I would go September, October. I like in the money. Again, you're looking for the stock to bounce back 20% from $4.20 to $5. All right? You'd still be down if you traded your stock $6 to $5. You're still losing $1, which is about 16.67%. So rather than being down 16 or 17%, I'm going to put you up 20%. Matt, how does decay work with options? Because sometimes it's beaten up. Yes. So decay hurts you more. So decay is real quick. You have your option value, okay? So you have a strike price of $10 real quick. Sorry if it's simple, too simple for you. You have a strike price of $10. The stock is trading at $11, yet the option is costing you $2 or $200. 10 to 11 is $1. So you have the value of the stock, which is the $1 for the option, and then you have the time value, which you go out and it's worth, let's say you have 30 trading days and you get $1, it's basically 3 cents of decay per day. So you take the difference in the stock price and the options price, that's $1, but you're paying $2. So you figure the $1 that you're paying is the time. So how does decay work? You divide it. If you have 40 trading days till your options expire and you're paying $1 as the VIG or as the IV, right? And you have 40 days. Every day you're going to lose about 2.5 cents of value on your option. So decay is worse if your option is out of the money, meaning if your stock, if the expiration date was today, your option would be worth $0, meaning you have the option to purchase stock at $10 and the stock is trading at $9.38. Your option is basically only worth the time value because it's out of the money. So each day you lose, your option becomes worth less and less, basically, because you're not in the money. So when I give my rules to my platform members and I tell you I like options in or at the money, right there's a reason, because you lose less on decay. And then I like giving yourself more time. So instead of buying this week, you buy 2 weeks out. Instead of 1 month, you buy 2 months out. Why? Because we can't predict the market. We're doing the best thing. We like the stock. We have a theory why the stock is going to go up. But again, we can't predict the market timing. Let's go on to the next question, please. Hopefully that helps you. Okay, EH, 22 and a half. May 21st calls, your average is 280. Yes, it's $1.83. Would I take the loss or hold on the spike? Well, to be honest with you, what I did with my options, because I have some of the same contracts, is I averaged down today. I definitely paid less than $1.83. I think I paid like $1.40 something, and I averaged down, and my cost was 280, and I bought double the amount of contracts. So let's just use one example, okay? Say you have the $2.80 contract, and you bought two more at $1.40 each. All right, I don't know if that was my price today, but I know it was in the $1.40 range. Okay, so now you're paying 280 plus 280, you're 560, and now you have three contracts. Okay, so your contract cost is about $1.89. So when I talk, Serge, about averaging down, you should have done it today. You should have done it this morning. People say, "Oh, I'm too late." The point is, we enter into stocks and options on the dip when the market is selling off. That's when we're looking for sales. And if you learn different and you learn to chase, then you're wrong. The fact that you're asking me the question now, I'm upset. I would have loved this question as a side note this morning. Like, hey, I'm down. So again, you're down $1. So that's about, you're down like 40%. You were down probably over 60% this morning. So yes, we average down when you're down 40 to 50%. And we average down by buying two. So if you had one contract, you bought two more, guess what? You'd be 6 cents out of the money, which is about 5%. So instead of being down right now at 34 or 35%, you'd only be down 5%. Yes, you would have three contracts and not one contract, but that's how you do it. You have to be a better trader. And I'm not trying to pick on you. I'm trying to educate everybody. When you buy one contract and it goes down 40 or 50%, you're not just buying a second contract, you're buying two more. Okay, that's how you average down. So right there, for example, $2.80, you bought two more at $1.40. Now your average is like $1.90, or maybe it's $1.92. Maybe you're still down 10 cents, which is like 8%. Being down 8% is so much better than being down 45%. So would I average down? Would I hold? You said, would I hold or take loss? I would hold. All right. You're hoping it gets back. You should have averaged down. You should have bought two more contracts. Next question, please. Crazy hot outside. Very general question. What are my thoughts on green energy? Green energy is one of the most beat up sectors out there. So I don't know that it really has substance and earnings and stuff like that. I've been following Plug. I looked at their releases. I looked at where they're expanding into like South Korea, Singapore, China, whatever it is. So there's certain green energy stocks. I like solar stocks. I like Jinko Solar. I like First Solar. I like Canadian Solar. I like some green cars too. I like NEO. I actually like Lucid. However, the stock is getting beat up. So until those shorts leave Lucid and I see some type of rebound there, which we didn't see today. It was down like 3%, then it was plus 1%, and I think it finished down a couple of percent. Again, that demand is not there. If you're in CCIV, no one asked about it, but that's what demand is or isn't, okay? FCX, CLF, you saw there was selling. It went negative. Both stocks went negative today, and then they rebounded strong. You're looking, if your stock did not rebound strong today with the market, you're in trouble, all right? So this is an alert, all right? If you missed everything else, this is very important. If your stock struggled today and did not rebound strong at any point of the day, in fact, there was extra selling, you want to get out of that stock probably. There's probably some bad news coming. Okay, so I haven't really looked at my phone yet. Let's keep those questions coming. Let's get some specific stock questions or something like that. Okay, here we go. Plug, make calls, sell or hold. Again, same thing. I would have bought today. If you had made calls and they're down, let's assume they're 521 calls like the other gentleman. And let's say they're out of the money, $28, $27. So they're out of the money and they're worth a fraction of what you paid for them. How do you average down with Plug? Well, great. This morning when the market opened, I would have been buying Plug, $20 calls, $21 calls. I would have went out a month, maybe to June. That way, if Plug did rebound, and it didn't have to rebound today, but let's say it rebounded next week, okay? You're a little safer. You don't have to worry about your May calls. You don't have to average down because they still might not be in the money. All right, let's say they expire May 21st. So you have 7 trading days and the stock has to be $27 or $28. I'm not sure if it'll make its way to 29 or 30 so that you really make some money by then. But if you average down, like you average down, even if you average down on those calls this morning, the way out of the money ones, because I mentioned them before, the $27 ones went as low as $1 this morning. I bought some of those at $9. Let me actually see where those are. Okay, so it was $27. It was May 21st. Plug call options. I bought some for 9 cents this morning and 10 cents. I tweeted it. That's how I averaged down. I didn't look where it was at the end of the day. So they expire in 10 days. Okay. and 20. Oh, I'm on the puts. $27. Okay, yeah, look at that. Okay, 68 cents. Yeah. Oh, that's great. Oh, I must have paid more. Maybe I paid 20 cents. I didn't get the minimum. The minimum was $15 per contract. They look to be like 69 cents is the mid price. Okay. But I paid like 21 cents. That's the proper way to average down. Again, I think I originally paid over $1, if not over $2. Again, just plan ahead, average on the right way. Sorry, I'm losing focus. Let's move on to the next question. Okay, Friday, SQQQ puts at 1050. What's a good limit price to enter now? So that's a very specific question. I like that. So let me just look at the SQQQ and let me see what I would have to take. So first you do, when you're thinking of a price like that, you think of the SQQQ, which is at $12.12. I told you I think it's at $12 or be the pre-market tomorrow. So percentage, it's going to move, let's say 4%. That would be 50 cents. It would go down to 11, okay? And you have the puts and 11 feet puts. Here we go. And so you get your delta, and let me just see if it comes up. Oh, there we go. Shoot. Oh, there we go. Okay, so the delta on that is basically 0.20, okay? So if I'm telling you the ETF is going to move down by 60 cents and you are affected by it by 0.20, you take 60 cents times 0.2 and you get a 12-cent move, okay? So if those options are currently selling at 11 cents, I would anticipate a 12-cent move to the upside. So I would put in my sale order at 23 cents. Hopefully that makes sense. Again, you have to plan ahead. So how am I doing that? I'm anticipating that ETF will drop by 60 cents. You take it, multiply it by your delta 0.2. All right. So you know that your option price will drop by 20 cents. If it's currently 11 cents, you're looking to get about 31 cents, something to that extent. Okay. Or no, 12 plus 11 is 23. Okay. Next question, please. Okay, FUBU going right up now. What do I think is a good exit price? All right, James, I don't know because it's not on my watch list at all. And if you guys can't tell, it is so hot outside. Glad I'm not by that pool with all that wind. Okay, so after hours. Okay, it's popping. Wow. So it popped during the day. It popped 1.2. So it popped 8%. It's going 23% after hours. So what is a decent exit? Okay, well, they crushed earnings, it looks like. They crushed guidance. There was a ton of buying today. You could expect this stock easily to pop north of $20. So if I had this stock, again, if it's popping, I don't know why people like to sell their stock all the time. When you're finally in a good position and your company comes out with good earnings or decent earnings, or it's moving in the right direction and you make money this day and you make money the next day, hold on to it. Those stocks and those options are so hard to come by. Where it just goes up day after day. So I'm not saying FUBU TV is going to do that, but they crushed, and that's what you want to see. D-Dog crushed the other day, and that's what you want to see. Even in tough markets yesterday, I don't even think D-Dog went down that much. That's why I was so excited to buy it this morning. Same with Roblox, when things finally turn around. So this stock, if it's been so beaten up, and who knows, let me just see. 3 months, you've lost 61%. 1 month, you've lost 25%. Again, for anybody that's new, FUBU, right? You lost 25% this month, 60% in 3 months. What would I be doing? I would definitely be holding. I wouldn't be thinking about selling at 20% gain, because all you're doing is making back what you lost. Again, when I invested in Roblox and it went down after I bought it, and then it popped up to the price I bought it at after hours, after they announced earnings, I was like, are you kidding? This is all I get, break even? So no, hold on to it. Get as much as you can out of it. As long as you see there's demand tomorrow, meaning inflow is better than outflow, and the stock price is going up, you hold on to it. Then you're playing with house money, all right? As long as you hold it the extra day and it goes up tomorrow, then you're playing with house money. So then you get to Thursday and you watch it. If it goes up again, if it's struggling, you could say, okay, I'll sell, but I still would have sold for more than I would have on Wednesday. And I'm hoping you can say the same thing on Friday, and I'm hoping you can say the same thing the following Monday. The point is, if it continues to go up, whatever your stock or your option position is, if you get 2% one day, 8% one day, this percent one day, it's good. James, if you're scared that people are going to sell off into this market, then you could take your 28% after hours and you can hope that it's only up 10% tomorrow and you're going to save 18% on the stock. That's a solution as well. I'm not saying I would do that. Stocks are so hard to come by these days that actually turn around. Then they have good earnings. And then when you have good earnings, it's most important that Wall Street likes your earnings, because if Wall Street says, oh, we're not really wowed by your earnings, the stock will still go down. So, James, seems like you're in a good one. I didn't know about that one. It wasn't on my watch list. So let's go to the next question, please. But good job, James. Oh, please. Oh, so sad. Okay, you're down 45% on Mara. You have 5 at 48.05. So the good thing is you don't have a lot of money invested, and maybe it is a lot of money, so I shouldn't even say that. But you're telling me terrible stocks, unfortunately. Mara, we haven't spoken about Bitcoin stocks for probably good chance of 3 weeks now because they're so beaten up. And as Bitcoin stocks get beaten up and the NASDAQ is tanking, Bitcoin stocks will lose 5, 6, 8% every day because there's no demand. If the NASDAQ does turn around, Bitcoin has to follow. So there has to be demand in the NASDAQ, which we haven't seen for 10 out of 12 days. And then there has to be demand in Bitcoin, and they both have to run together for you to go higher. Without one or the other, it will collapse. Do you understand what I'm saying? You need both support. So what would I do? Honestly, I would have loved to have you out at Mara. I don't even know where it is. I think maybe it's like $20 or $20 range. Let me look. It's so disappointing. It doesn't even matter. Whatever it is, let's say it's $23. I wouldn't have you in there anymore. I wouldn't have you in EBON. What you should have been doing with EBON the whole time, what somebody else did, is every time it spikes up 20 or 25 cents, you sell. Then you buy the same position, 59 shares, when it's down 10 cents. So you make 30 cents per trade. You probably could have done it 5 times in the last 3 weeks. So that would have been $1.50. So instead of your average being $5.54, you would have been around $4. Okay? Not everybody can do that because you don't want to restrict yourself in day trades. Same with TYME, $2.19. It's going to happen eventually for that stock, but it's about stepping in poop. You've probably been in that stock for a good part of 3 months. EBON, you've probably been in a good part for 2 or 3 months. And Mara, you've probably been there for 2 months. So you really haven't been doing much trading, which we always every day want to think of the best way to increase our portfolio. If you see something going down, right? Say Mara was off 2% and you're like, if the market crashes, if the NASDAQ crashes, Mara could drop 12%. Sell your Mara, save that 10%. Right? If you have 5 shares and you're saving what, $4, 5 shares, $20. Okay. That's a good percent because you're talking about you only have $240 in that stock. So you're saving like 8%. Okay. So again, anytime you could save money, please, if you see EBON spiking, I hate to say it because I'm a big bag holder, but please sell your shares, buy them back cheaper if you want to be. Same with TYME, unless you want to hold, but it seems like you've been in there for a while. You have 1,000 shares at $1.70. Okay, at least you're not in that much trouble. I think it's what, $1.35 or something like that. Maybe it's $1.40 now. I'm gonna look it up, but again, I know a lot of you got this stock through stock data. Oh, $1.19. Oh, sorry. The good news is there's been demand the past 3 out of 6 days. So yeah, if you're in TYME, so new alert. Okay, I wouldn't be selling. You're in at $1.70. What would I do? So $1.70. It's at $1.20 right now. It's down 28% in the last month. I'd be buying. I would average down. If you have the money, Bobby, you should average down with this one because you're down 60 cents on a dollar. You're down about 33%. Stocks, I average down when my stock is down 10%. So you happen to, maybe you got unlucky, maybe you got lucky. You're picking the right time to average down. I don't know if you have $2,000 extra dollars to spend on this company. If you do, I would spend $2,000 and I would assume that the turnaround is going to happen. Now, I would do my research first. I'm not a financial advisor, and I haven't followed this stock for quite some time, ever since I saw there was no demand. So I'm not saying there is demand, but I'm saying today inflow is greater. On Friday, inflow is greater. In between, there was selling. I would be cautious, but you can definitely average down. I think you should hold. If you don't want to average down, I would hold. NNOX is getting killed. You're down almost 20% today. You only have 1 position so far. Am I planning to average down? Actually, I have 3 positions. I bought 2 more positions today. So if you're part of my platform and you looked on the app on the spreadsheet, I bought 2 positions, which I actually mentioned earlier as well. At $21, I bought them on market open. I know it was down a lot. Again, I was assuming tech was going to take a shit on itself and the whole market was going to be down and I was going to get a whole bunch of positions. The only position I did not buy was Carnival. Also, I didn't get the best value. When I put in my bids, stuff actually fell under that. Like I bid on something and then I looked and it was $1 less. And I'm like, oh, I could have got it for $1 cheaper or 50 cents cheaper. The point is you make a guess and you put in your bid. So yeah, now I have 3 positions there. I was $21 on the average. God, I wish, I can open my spreadsheet right now. So yeah, since you asked, since you're here, and since I do want to answer everybody's questions, I don't want to shortchange anybody. But again, my spreadsheet is on my app. It's right here. You'll see all the green positions, the very winning positions. All right, here we go. That's Roblox. That is NNOX. Here we go. So I bought it at $35.30, then $28.30, and then I bought 2 today. One at $21 and one at $20.90. My average is $26.38. So $26.38. Let's see where NNOX is right now. So $26.38. And we are at, it's $21.30. Okay, there was huge demand today, huge inflow. I don't want to throw people off. It was still down 20% today. I read the reports. They came out with the numbers. I actually liked what I read. I think it's a solid company. I believe it's an Israeli company. What they do is 3D images for X-ray machines. If you didn't think the technology they created was a piece of crap, because it was all, whether it was a piece of crap, whether it was real, or whether it was like Theranos, that girl, that woman with the voice that she made up the whole thing. It was going to test your blood. Anyway, people thought this was a farce. I don't think it's a farce. I think the company's getting killed. I know some institutions like it. I don't know what they're waiting for. I bought my more positions at $21. I'm now at $26 for my average, which isn't so great. Tiger, I have May and June calls. Again, Tiger was getting beat up, so Tiger is going to follow Futu. It's going to follow other stocks like that. It was being beat up. There was support today, so that's the good news. As tech turns around, if you think tech's going to turn around, Tiger will be good. Futu will be good. If tech struggles, those two stocks will struggle. If tech turns around, though, those stocks, instead of moving 4% on up days or 3%, they'll move 8%, 10%. On bad days, you'll see them drop 8, 10, 12%. If today was red, that stock probably would have dropped an extra 8%. I mentioned that in the wrap-up yesterday. I said, your stock, Tiger, is going to move with the NASDAQ. There is support. I showed it this morning when we went from red to green, like right away. There was huge buying, huge demand. Okay, let's get the next question, please. FSR, will it go up? That's Fisker, I believe. Yeah, so I think Fisker went under $9 or $9 and change today. I have it someplace. Again, I don't think I averaged down on Fisker because I'm not that interested in it. So $10.69. I took a position. I believe my position was like $12 and maybe 30 cents. Maybe it was $11.39. I don't know. I'm just kind of seeing those numbers. Yeah, so it's definitely, maybe it's $11.39 or $11.29. That's probably one of my positions. Okay, so yeah, it's off. It's off 6 cents. It went up 4% today, which is 43 cents. There are a lot of shorts. I know somebody else mentioned RIDE, R-I-D. So maybe this gentleman will watch the replay because he's not making a comment about RIDE. But he tweeted like 3 things today. Oh, RIDE, they're doing a deal with GM. They're doing this, they're doing that. That's people that pump stock. Now, I'm not saying this dude's a pumper or he's wrong about RIDE, but there's a huge short presence on RIDE, and that's why it was in the $7 or $8 range, something like that. It's not in the $10 range. Fisker was same time with it. They made the announcement about both stocks that should be worth under $10. Yet Fisker is worth $10.50 and RIDE isn't. Anyway, I'm exhausted, guys. We're over an hour. I love you guys. Please, if you're late to asking questions and you want to know about your specific stock positions or anything like that, do me a favor and get here early and put it up there. And we're all done, Carlos. All right, so we're going to say goodbye to everybody, and we'll see you guys tomorrow. Please pay this forward, share this video, tweet it out. I appreciate everybody. Thank you.